Hey everyone, welcome back to Corporate Decoder, the place where we untangle the hidden stories within corporate filings. And today we are diving deep into the world of Schwab Fund's semi-annual shareholder report for June 30, 2025. They've laid out a whole lot of numbers and information, and our job is to cut through the jargon and find the juicy bits, especially those financial tables. Before we jump in, if you love getting the real scoop on what's happening behind the scenes of big companies, make sure you are subscribed to the channel and consider joining our Discord community linked in the description below to chat about these filings with fellow degenerates. So what's the big story here? Well, Schwab dropped their semi-annual report and it's packed with details about their money market funds investor shares, ultra shares, and government funds. A lot of numbers and percentages. But what does it all mean for you as an investor? Let's find out. This report covers the first half of 2025, January to June, and gives us a snapshot of how these funds are performing and what they hold. Let's get straight to the heart of what most people care about: the costs. Schwab breaks down the cost for a hypothetical $10,000 investment. For the Schwab Prime Advantage Money Fund Investor shares, that comes out to just $17 for the 6 months. That's 0.34% per year, which is pretty low even by money market fund standards. Now, for the ultra shares of that same fund, it's even lower, just $10 on that $10,000 hypothetical investment, which is 0.19% capped annually. This tells us about their fee structure. Ultra shares are designed to be cheaper, and it looks like they are delivering. The Schwab Government Money Fund Sweep shares cost a bit more at $22 for that 6-month period, translating to 0.44% annually. And the investor shares of the Government Money Fund are $17 or 0.34% annually. These numbers are important because they directly impact your returns. We see a consistent theme of low cost, which is a hallmark of Schwab's strategy. Now let's look at the sheer scale of these operations. The Schwab Prime Advantage Money Fund boasts net assets of a whopping $371,120 million. That's almost $400 billion, folks. They also hold a massive 762 different investments. This suggests a highly diversified portfolio aimed at minimizing risk by spreading money across many assets. The weighted average maturity is 21 days. This means the fund's investments mature very quickly, which is typical for money market funds aiming for stability. Short maturities generally mean less sensitivity to interest rate changes. The 7-day yield with waivers is 4.16%. This is the income you can expect to receive considering any fee waivers, which basically means the fund is temporarily reducing its own fees to boost the yield for investors. Interestingly, the yield without waivers is also 4.16%. In this case, waivers aren't actually changing the stated yield, which might indicate either the waivers are structured in a way that doesn't impact the headline yield, or perhaps we're seeing current market yields that are already high enough not to be significantly reduced by the waivers. The effective yield, though, with waivers is 4.25%. This effective yield assumes that all interest income will be reinvested, which is a more realistic picture of your potential return if you plan to keep reinvesting your earnings. The Schwab Government Money Fund has net assets of $81,085 million, still a huge number, around $81 billion. And they hold 297 different investments, again, very diversified. Their weighted average maturity is 35 days, slightly longer than the Prime Advantage Fund, but still very short term. The 7-day yield here is 3.96%, and again, without waivers, it's also very close at 3.95%. The effective yield is 4.04%. These numbers are all quite close, showing a stable, low-risk profile, which is exactly what you'd expect from a government money fund. The Schwab US Treasury Money Fund is their largest at $92,451 million. That's a massive amount of cash parked in US Treasury securities, but its holdings are far fewer at just 44. This implies a concentration in US Treasury debt, which is considered the safest of the safe. The weighted average maturity is 38 days. The yield is 3.89%. This fund is all about safety of principal and liquidity. Then we have the Schwab Treasury Obligations Money Fund, also a giant at $74,269 million. It has 78 holdings and a weighted average maturity of 34 days. Its yield is 4.03%. All these funds are designed to be safe havens for cash, prioritizing minimal risk over high returns. Now for the real deep dive, especially when we look at the Schwab Prime Advantage Money Fund portfolio holdings as of June 30, 2025. This is where the story gets interesting. We see a huge chunk, around 23.4% of net assets in certificates of deposit. Let's scroll down to see the major players here. We see Bank of America NA issuing a staggering amount of these CDs. For example, they have a certificate of deposit for $300 million maturing on July 1st and another for $200 million maturing on September 2nd. These are massive amounts of short-term borrowing by a major bank. Barclays Bank PLC is also a big player here with certificates of deposit totaling hundreds of millions of dollars maturing in late 2025. The rates are generally around 4.6%. This is the kind of detail that shows us who the fund is lending to and for how long. Then there's a significant portion, nearly 10%, in asset-backed commercial paper. This is where the fund might be buying short-term debt backed by things like credit card receivables or auto loans. Companies like Atlantic Asset Securitization LLC are issuing this paper. Notice the maturing dates, generally within months. This all points to a strategy of very short-term, very liquid investments. Another big piece, around 11.6%, is financial company commercial paper. This is essentially short-term debt issued by financial companies. We see giants like Australia and New Zealand Banking Group issuing large sums of this, with maturities also within months. And let's not forget the non-financial company commercial paper, which makes up less than 1%, but still shows diversification. Companies like Automatic Data Processing and Philip Morris International are listed here. Then we have non-negotiable time deposits, nearly 10% of the net assets. These are essentially deposits made with banks for a fixed period and rate. Major global banks like Royal Bank of Canada and Toronto Dominion Bank are issuing these time deposits in amounts often exceeding $1 billion. This is effectively the fund acting as a short-term lender to these large banks. Finally, we see those variable rate demand notes, which are municipal securities offering holders a put or tender feature. This means they can essentially sell them back at par value plus accrued interest. Companies like Breckenridge Terrace LLC and California Public Finance Authority are issuing these notes. The rates are generally in the 4% range. But the absolute largest category is repurchase agreements, making up over 40% of the net assets. These are crucial. We see a big chunk in US government agency repurchase agreements. This is where the fund buys securities with an agreement to sell them back later. It's a way to earn a short-term return on cash while holding very safe collateral. Banco Santander is a major counterparty here. The fund is essentially lending money on a very short-term basis to these institutions, collateralized by US Treasury or agency securities. For example, this Santander deal matures the very next day, July 1st. And we see major banks like JP Morgan Securities LLC across many of these repurchase agreements. These are massive daily transactions reflecting the fund's role as a major player in the short-term lending market. The collateral itself is incredibly safe US Treasuries and government agency securities. Looking at the financials for the Schwab Prime Advantage Money Fund, the net assets at the end of June 2025 are a staggering $371 billion. This is up from $218 billion in December 2024. That's an enormous increase, showing massive inflows of cash into this fund. The statement of operations for the period January 1 through June 30, 2025 shows investment income of almost $8 billion, which is impressive. Expenses are kept very low at about $500 million, and even with expense reductions, that's a net investment income of over $7 billion for just 6 months. That shows incredible efficiency for the period January 1 through June 30, 2025, shows investment income of almost $8 billion for just 6 months. That shows incredible efficiency and scale. The most striking thing from these reports is the sheer size and stability. These money market funds hold trillions in assets across all the funds. They are acting as a massive short-term lending desk for the financial system. The yields might seem modest compared to riskier investments, but for the fund's purpose of preserving capital and providing liquidity, these numbers are spot on. The strategy is working, and investors are clearly trusting Schwab with a huge amount of their cash seeking safety and a decent yield in uncertain times. The diversification across thousands of holdings and the focus on ultra short-term maturities and high-quality collateral in repurchase agreements are all hallmarks of a very conservative and stable approach. It's less about making a killing and more about not losing money while still earning a reasonable sustainable return. Alright, that's our deep dive into the Schwab Fund's semi-annual report. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description to keep the conversation going about corporate filings and financial analysis. Thanks for watching. See you next time.